Welcome back. This is our second segment. This is for March 22nd, 2025. And this is the trade of the week. As always, we start with our gap trade. If you're a futures trader, short-term trader, or even if you do you do your uh, the option strategy with whether it's your iron condor or condor strategy. These gaps are helpful. You can see that Monday we had a very small gap and we did close that. And then the same thing on Tuesday, we actually had the downside and we closed it the next day. And then Wednesday, we had a small gap. We filled it. One thing is, of course, if you know one of our strategies is the FOMC strategies. As far as the Tuesday strategy, we buy on Tuesday and sell right before the FOMC. Now, this was a huge, really nice move after the Chairman Powell's announcements and the Fed announcements. But then what happened on Thursday? We gapped down. And Thursdays, as you know, it's like a reversal movement of the FOMC day. And then we closed that gap. What happened on Friday? The opposite. Again, we gapped down. By end of the day, we closed that gap. So you could have had 1, 2, 3, 4, at least 3. This happened very quickly. 3 trades for the week. We also pay attention again. The markets have memories, and this was a non-farm payroll bracket. And see how nicely. By the way, this is our 60 minutes. So how nicely that the lower edge of the NFP held. That became, once we broke it, you would have been on the short side. We tried to break, this would have been, again, a fake, or you can do it on a 2 minutes or 5 minutes, would have worked out a little bit, but not a lot of profit. And then you would have, again, sold. So this zone at 57.35 was a nice resistance, and it continued. So now the goal is, if we hit this upper edge, if we reverse, then we want to go short. If not, then we will stay within this bracket. So keep those numbers. You see that 5,800 zone, again, it shows up on the futures. So be aware of that. This week, our ETF of the week was uranium, the junior uranium. They were up 8.3%. On the other hand, the laggard was the Valkyrie Bitcoin miners, WGMI. It was down 4.8%. India, as I mentioned, a lot of money went back. It almost parabolic move. You can look at from internet to banks like IBM and IBM. Which is ICICI, the bank, so IBM Bank. And then you have HDB, you have, again, the internet companies, they were up 5%. But the China's ex-state-owned enterprise fund, CXXE, was down 4%. Now, I got few charts on the stock but before we're going to talk about, just briefly, I'll just want to bring NVIDIA, which is, of course, it used to be that big leader. It's kind of wounded. But you see how nicely we just hugged that the lower edge 1, 2, 3, 4 days in a row. You could have played that again, that in and out option strategy on this, and it would have been a winning strategy. So next, I'm going to spend a little time on Tesla. It's been beaten up. It's almost down 50%, about 49.5, 50% from its high. And is it time for bounce? And also seasonality. I just want to share this with you. For the last, when you look at the 8 years, and this year was the 9th year, from February 28th till March 11th, well, Tesla has been down every single year from that time period, and some of them like big time, including this year. Look, I mean, from right around here, and we were down right around here. So is this a good time to get into Tesla? Again, like the market, we got a little mixed message. First of all, we see that we had a nice reversal here. And finally, on Friday, this is our Ichimoku Friday, we broke above our trend line. So that's the good thing. The momentum, the trend of the momentum is up, but DMI negative still overpowering the DMI positive on the daily. The same thing on the weekly. So that's negative, but the positive is, even though this is really narrow cloud, it's been holding, and we having dojis and actually the tweezers. So they are holding. And even on the monthly, we are holding. On the monthly, the momentum, the DMI positive above the negative, we don't want this negative cross that. So there is a little mixed message. So we do have support. We broke above the trend. So what we have to do, we have to come to the shorter term. Now, what we see is, well, on a 60-minute, look what happened. We actually broke above the negative on Friday, and we do have 3 candles above the cloud. The problem is the cloud is becoming very thin. So it is not a big support. We like to have it pretty wide. And also laggard line hasn't crossed it. So we don't have the complete confirmation on the 60 minutes. On 30 minutes, though, we do have it. So what we see on Friday morning, the first thing on Friday morning, you see how the DMI just crossed. And as you can see, we broke above the trend line, I mean, the turning line, the standard line, the laggard line, the lagging line crossed. So this was positive. And when you come to 10 minutes was even better. 10 minutes was telling you, hey, this is a good time to get in. So this guided this, this guided this. So, but still in the long term, we haven't had the complete conviction, especially with the momentum. But the short terms are telling us, well, we are on the positive side. So far in the short term, the same thing when we look at the expected move, we did just again looked at the lower edge of expected move be held. So that was another thing we could have played again in and out option right here on Wednesday, on Thursday, and Friday. When we come to on a weekly, when you look at the so again, we're getting a little mixed message. So either you have to be really short-term trader or you have to be patient, because we are below the 20-week moving average. We do have a up the positive slope on the our LRC, and we do have, you can see these 2 candles hitting the -2 standard deviation. The problem we have is the momentum is down and the A wave is down. So again, on a weekly, we're getting mixed message. So we could have a bounce, which we've been having because of touching negative standard deviation, but long-term momentum is down. When we look at Fibonacci from the low, we're going all the way back to the beginning of 2023. And then you look at the high of recent right after election. What we see is we having resistance at the 61.8. So this area is important. So we are right there, the $249 area. So we want to break that, otherwise it will be rejected. Again, this is on a weekly basis. There's more of a long term. When I look at Hakinashi, on the other hand, which is on a daily basis, we have been back and forth between the green and red candles on Hakinashi. MACD has turned positive. The TSI has turned positive. So on the short run, that looks at least stability. The problem is we are in a down slope right on the median line. So again, this will be more of a short-term play. We like to see things like this. We love to see even Hakinashi moves like in tandem in these beautiful green and expanding candles. And look what happened. This would have been a great time to have 2 3, 4, I mean, these green candles are continuing and MACD went positive. So this would have been a great trade. But right now, we're getting mixed messages. And of course, this would have been a good short. So we come to, again, another, we're looking on a weekly on Hakinashi. That's why we still don't have the conviction. That was our daily. This is weekly. We still got red candles, no buys. MACD is negative, no buys. So although we're hitting the negative standard, the 2 standard deviation, we need this to turn green and give us that, again, the confirmation. We are not there yet, but we are watching. So if you want to play 10 minutes, 30 minutes, 60 minutes, well, there's legs to play on. But for long term, I still, unless you become a little speculative, because sometimes it's better to be late than be too early and stop out. So just food for thought. One stock we've been talking, as you know, we've had our tax losses candidates. We talk about at the end of the December, beginning of January. There were a few of them, including Intel, there was Micron, we had CVS and Walgreens, and the couple of other ones were the Dollar General, and this is from January 11th, I believe. We talked about this chart, and I mentioned, listen, we are flattening here, and we got a squeeze, although the A wave is still negative. So just watch this. This is a down slope, so we're still out of, not out of danger. We're on the 20-day moving average. So you want to watch that. Well, this is where we were talking about. This is where we are today. We have broken above the trend line, the 200-day moving average, and the momentum is looking good. And we do have a resistance about $90. So when we were talking about this, we were at, sorry, this is, yeah. So we were at $71. Remember, the markets are down between 3.5 to, depending on if it's S&P, 7, 8%. So this has done well, and we still could go up. When we come back, we see that, yeah, we had the, on a weekly basis, we had one squeeze. Now we are back to the squeeze. The good news is now the squeeze is on the positive side. The A wave is up. This is on a weekly. We are breaking above the 20-week moving average. Although slope is down, it's flattening. Although we are in 1 standard deviation, we still got room to get to the 2 standard deviation. As far as the Ichimoku, we see, well, nicely, we are on a daily, we are above and DMI positive cross right here. On a weekly, we have been above the turning line and standard line. Monthly, of course, it's been, I mean, this stock was beaten up. I mean, it used to be, this was a $260 stock. Just think about that in 2022, 2023. So on a monthly, we still got a long way to go. We are below the turning line. On a weekly, we are right about crossing that the negative DMI. But that's what these, again, the short term gives you the heads up. 60-minute looks good. And if the lagging line is up 30 minutes, although you could have had few whiplash here, but we do see we have been above that since about $80. We've been above the cloud and the 30 minutes, I mean the 10 minutes. So the other stock we've been talking about, the Celsius Drink. Now, that was also a little risky, but what we were seeing is the download slope. This is, again, it was at 2676, January 11th, one of our stock loss candidates, below the 20 days. So you have to be, again, be patient. Download slope. The momentum had changed. Although we were flat, but you could see the momentum is moving, and then the A wave is about to move. So what happened next? Well, we were not out of the woods. We were under the 200-day moving average. And then we started stabilizing, and we are at right now we have about $35 as a resistance. We're at 32.93. So from 26.76, so we've moved up again. It's been a nice move. The same thing with the Ichimoku. We see we've been positive. We are above the cloud. The weekly is above the trend line, and the DMI has changed. Even I think 2 weeks ago I mentioned watch this monthly candle, and we have bounced. And again, 10 minutes, 30 minutes, and 60 minutes are confirming that. The only thing is, again, we do have a little resistance coming up. Um, uh, as I mentioned, right around this $35, this is a 200-day moving average. When we look at the weekly, we are in a squeeze. So we have a little resistance coming, but if the squeeze fires and the momentum is positive, then this slope could get positive and we could continue. Again, this was a stock that it was at almost $100. Where are we now? We went down to $25. And so it's been moving. Of course, there's a lot of legal action. There's been a lot of class actions against the company for the accounting reasons. All right. So at the end, we will again scan for squeezes. And I chose S&P 500. You have quite a few candidates from AT&T with a technical rating of 5 stars. And so we have Philip Morris, we have NiSource. So you got quite a few. Last week we had, again, the earnings season is over, but we still got few came out. So absolutely break even right in the middle. 104 prices were up, 104 down. 72 reported positive, 66 negative. The only thing is a 9 forwarded positive guidance versus 25 down. So we had the Nucor, we had the Neo. There were like some interesting, again, companies came out as STLD. These are the steel companies. Micron, that was important. As a matter of fact, Micron Technology beat the expectations. Nike came out and they beat the expectation, but FedEx missed the expectation. So this coming week, we still got some interesting earnings coming up. We have the GameStop, for instance, used to be the darling COVID era. The Chewy, Dollar Tree. We got I talked about last week. We talked about McCormick from the seasonality point of view. They got earnings coming up, so let's watch that. As far as we actually review some more. Just if you play calendar or horizontal option strategies, we got few like Chewy, for instance, or Petco. So you can use those, or Lululemon, that's another one. So we have GameStop, Intuitive Machines, we got Dollar Tree, we got Lululemon coming up, as well as Chewy and KB Homes. I would pay attention to that to see what is their outlook. With that in mind, I hope that was helpful. I wish you a wonderful weekend and a successful and prosperous week ahead. Thank you so much.